this higher for longer dynamic, obviously continuing to suppress expectations for rate cuts this year. So as of this morning, the futures are implying no longer 3 rate cuts, but instead 2. And right in perfect timing, you've got, as Emily mentioned, Jamie Dimon's investor letter released this morning, talking about the potential for significantly higher rates moving up to he said 8% or even more in coming years, reflecting record high deficit spending, obviously geopolitical stress. And he sort of called out 4 things. He said the huge fiscal spending, the trillions needed each year for the green economy, the remilitarization of the world, and the restructuring of global trade, all of which are inflationary. So, he's got a mixed track record in these sort of prognostications, but I don't find flaws in the inflationary impact of any of those points. So I would say that does largely corroborate with our higher for longer framework here as we look out, particularly over the intermediate term.
A banker, in this case, the world's richest banker in world history, who never actually created a company. I mean, the amount that this guy's worth without having created the company is epic. They've done better. Like they've become more powerful with rising interest rates, right, Steiner? I mean, they are going to plunder the weak. This is how the king becomes more powerful with higher interest rates. So there is a component of that is agenda, but there's political pressure. I don't think that. I mean, Dimon's not a Republican, is he?
No, actually, he's a Democrat.
Right, and so there's political pressure for Powell to not raise interest rates at this point or only do 2 cuts. Like I wrote this morning, Powell is the wildebeest. Inflation is the lion. The bond market is the lion. If he cuts interest rates 1 time, inflation is going to go higher faster. And then bond yields then they got to turn around and raise interest rates. So, I don't see a world where, whether it's Trump or it's Biden, where Jamie Dimon's going to get off this by next year, as inflation's going back towards 4 and maybe higher than that, maybe towards 6. As the base effects continue to ease and oil's at 100 or whatever. I mean, you're gonna have to deal with this. So, Americans that are investors who are in our seats need to really figure this out, because if they haven't so far this year, they've been absolutely smoked.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.